Bitcoin prices have been surging close to $18,000 today on Thursday. Our next expert thinks that this is not the end. In fact, she predicts $100,000 by next year and perhaps higher beyond. OKCoin CEO Hong Fang joins us today. Hong, it's the first time talking. Welcome to Kitco.
Thank you for having me.
Let's set up your thesis here. Why do you think Bitcoin's going to go a lot higher? We saw similar movements in 2017. Back then, experts were predicting higher prices as well, but as soon as it touched almost the $20,000 mark, it didn't really sustain that level for very long. So what's different this time?
Yeah, I think basically when we think about Bitcoin, we have to ask ourselves what it is. The fundamental value proposition for Bitcoin is that it is a great store of value. It is very scarce. There is only 21 million Bitcoin available that is pre-programmed into the code. It is very durable. Obviously, it is digital. It is in the air. It is accessible. It's online 24/7 trading, accessible anywhere you are in the world. And it is divisible. And it can be broken into 100 million Satoshis. And it's very divisible. Also, it is verifiable and censorship resistance. So I think there is a lot of similarity between Bitcoin, the characteristic of Bitcoin, and gold, which has been a long-term store of value for people around the world. The only difference is that Bitcoin is the first native internet money that we have seen in our human history. And it doesn't have a physical presence. That's also why I think it takes a long time for people to actually appreciate the value and the uniqueness of it. I think the difference between today versus 2017, there's a lot of stuff going on, obviously. I think back in 2017, the price cap was pretty much due to ICO run, which brought in a lot of speculative trading demand around the world, particularly in Asia. When you think about supply and demand for an asset like Bitcoin, it doesn't generate cash flow itself. Therefore, it is a very much supply and demand play. But back in 2017, the supply is fixed, right? The maximum supply is fixed, 21 million at most. Obviously, the circulating amount is actually smaller than that because there's a certain amount that hasn't been mined yet. And also there are a huge portion, 10% actually, that has been dormant since they were mined. But on the demand side, back in 17, a lot of that demand is very fickle. A majority of that demand is very fickle. It's very speculative trading driven. Now, fast forward in 2020, I think there's a lot of stuff happening that are changing the dynamics there. 2020 is a very extraordinary year. I think the pandemic is bringing a lot of uncertainty to the world. In response to that, the governments and central banks around the world are printing money in large magnitude. And that brought people to realize again how easy it is for us to see free money flowing into the system, just printing out of nowhere, just like what we saw actually back in 2008. And Bitcoin was actually created on the heel of 2008 financial crisis, exactly because of that.
Okay, now let's talk about the path to 100,000 Bitcoin. You've outlined a few scenarios in a recent op-ed that you've written. One of the scenarios that I'd like to comment on first is the matching of the market cap to gold. You wrote that gold currently has a market cap of $9 trillion, which is about 2% of global wealth. And you think that Bitcoin will eventually, as people recognize it as a superior version of gold, catch up in market capitalization. Can you walk us through your assumptions?
Yeah, absolutely. I think it's back to my previous assumption that we are in a different phase today versus 2017. I think in 2017, the Bitcoin is really at a collectible phase where a lot of the speculative trading is driving the demand. So it's really hard to come up with a solid supply and demand model for estimating the value. I think today we're at a very early stage of seeing Bitcoin as the store of value. And that's also where we see a lot of the demand coming in that's actually long-term holders, institutions, companies, even individuals who have a stronger belief in Bitcoin's value proposition as long-term store of value. So in that case, I think I'm making very conservative assumption to some point in accounting for the timing uncertainty, right? That we have no crystal ball into the future. So we don't know whether this will happen in the next 12 months or 24 months or 6 months. But looking at what we have today, seeing all the institutional endorsement coming, building up, and Fidelity coming out with a report officially saying, we recommend having 5% allocation of your wealth into Bitcoin because it has all the good things, and it's also unrelated. There's not a lot of correlation with the historical asset, traditional asset. So if we take just 2% of the global high net worth individual, not even the whole family wealth globally, and do that math, it can easily get us to what you were talking about, that 100,000 price point.
Yeah. So, and potentially beyond, if you assume that it matches fully the gold's market capitalization, but that's longer term in the future.
Absolutely.
Right?
Yeah. Yesterday, the one of the richest man in Mexico, right? He came out saying that he actually allocates 10% of his wealth into Bitcoin. And just I just wonder how many people out there actually do that allocation well over 5%.
I think that this year was very interesting because in the first time in a long time, we saw gold and Bitcoin have a close correlation with each other. And I wonder if it's because some of the same macro drivers are behind both, or is this a complete coincidence?
I'm of the view that it is being driven by the same macro themes, which is people are seeing the money printing happening around the world, and people also realize that this pandemic has been lasting longer than expected, and different from what we had in 2008, which is pretty much all happening within financial world. Today, we actually see impact in the real economy, and that may take a while for the economy to recover. Combining those two, and also previously we see Fed reacting to that, right? Basically, they came out and say, you know what? Historically, we have a 2% to 3% inflation target that we hit, but we are seeing what's happening, and we may not stick to it. We may go well beyond that inflation benchmark. So I think seeing that, a lot of the investors, hedge fund, macro fund guys, wealthy people, or even just individual people like you and me, got to think about what are the risks long term from an inflation risk perspective. Now in the US, I think what US being able to enjoy over the last decades, or more than 2 decades, are that a technology in itself is a natural deflation mechanism, and it continues to be that. However, when the real economy is under pressure, and when you see the money printing going on, I think that inflation risk long-term is real.
Right.
It's something that you have to account for.
So Hong, let's talk about that comparison for a bit. You brought up the comparison of Bitcoin and gold. Now, I've heard arguments on both sides of this debate. The counter argument would be that, look, people buy gold, like you said, as a store of value, and you've made that comparison to Bitcoin. The argument here is that gold has had a history of 5,000 years as a form of money. Bitcoin has not had that history. It's not had that track record. Gold is a physical asset, which a lot of people still trust more than something digital. And of course, gold does not have the price volatility that some argue is inherent in a characteristic of a safe haven store of value. All of those things Bitcoin does not have. Can you comment on that?
Of course, happy to do that. You actually mentioned a word which I think is essential. The word is trust. I think whether it's gold or fiat money or Bitcoin as a potential future store of value, or even global reserve currency, trust is essential because for anything to be that reserve currency, people have to have widespread trust in that asset to be able to hold value. Either over time or across different jurisdictions or at larger scale, right? So that I think is essential. And building trust takes time. And I think that's also why it takes, right now, Bitcoin, the first Bitcoin was mined in early 2019. The white paper was published by end of 2018. So right now we're looking at 11, 12 years of Bitcoin compared to thousands of years for gold to actually evolve and actually gather that adoption globally. So Bitcoin is extremely young in that sense compared to gold. That's exactly, there's nothing to debate about that.
Sure.
But I think we are heading in that direction. We're talking about first principle, right? We need to look at what gold has to offer to us as individuals, as consumers, versus what Bitcoin has to offer, there's a lot of superior quality in Bitcoin versus gold. The one, again, two things are Bitcoin is more easily verifiable. It is also more censorship resistant than gold, and it's more divisible.
What do you mean by censorship resistant? What does that mean?
Meaning it is encrypted, right? So basically, owner of Bitcoin hold the private key. As long as you hold the private key, you remember the private key in your own mind, nobody can have access to it. Gold, people can still have access to the physical gold if they find it and take it away. But Bitcoin, if you just remember that private key in your head, nobody can take it away.
Right. Now, what we're seeing this week, I can't help but reminisce about 2017, which is that Bitcoin has been rising and gold has been stalling, if not falling down. Speculation from both the Bitcoin and gold communities is that the same money that used to be going into gold is now going into Bitcoin. I don't know if you have any comments about that.
Are you asking me whether people are choosing between gold and Bitcoin?
I'm asking you if you think Bitcoin is stealing gold's thunder in more simpler question terms.
I think it's a question of asset allocation, right? Okay. For any rational investors, when people allocate their money between gold and Bitcoin, they have to ask about the risk-reward profile. How well does this asset help me protect my downside risk? And then what is the upside risk? I think from a downside risk perspective, Bitcoin and gold are pretty in line with each other. Although personally, I would say that Bitcoin is probably superior in some aspects, particularly given its fixed supply. However, from an upside perspective, I think Bitcoin has a lot to earn, just given where it currently is from a market cap perspective versus where gold is. I think there's a lot of room for Bitcoin to grow. So when investors are looking at that math, they got to think about how much allocation they want to adjust to put in Bitcoin versus gold. Someone
asked me this earlier. If I had $100,000, how would I allocate my assets? How much of your $100,000 would you put in Bitcoin?
I cannot comment your allocation because I think everyone's...
No, just for you.
Should be your own decision.
Sure.
For me, 100,000, I'll probably put 20% in Bitcoin.
Okay.
I'm not all in yet because I still have my liquidity needs every day. But
sure. Well, you don't think Bitcoin could cover your liquidity needs?
Not now. I don't think yet. Yes, to some extent, that payment utility hasn't come up yet.
Yes.
But there is a very liquid trading market for Bitcoin and USD. Yes, I would also have other asset allocations like blue chip equity and real estate and some of the other stuff. But Bitcoin is definitely a very top on my list.
What about the argument that Bitcoin has been used for illicit activity and that governments will eventually crack down and potentially ban cryptocurrencies because of this?
Yeah, there are two sides to that statement, right? About Bitcoin being used in illicit or illegal activities. That is true, but that is also true with gold, with US dollar, and even with some popular commodities or things that people actually use just to hide what they're doing illegally. So I don't think that would be a counter argument to whether Bitcoin in itself is a good thing or not longer term. Now, when you talk about regulatory ban or government ban, yes, we've seen the government ban of Bitcoin in different pockets of the world. Some country ban Bitcoin, no matter what you're doing it, either using it or holding it is illegal. Some countries have partial ban on it. You can hold it as assets. It's legal assets. However, you cannot use it to pay or you cannot trade it legally. But however, when people talk about regulatory ban, I don't think that is a real risk to Bitcoin at this point. It could have been a risk if there are two big assumptions. One, if there was only one single global government, and two, that one single global government were actually have the vision enough to take actions very early on. For example, in the first 2 or 3 years, or even 5, 7 years of Bitcoin network development, and close it even before it gather enough adoption. But I think we are well past that point. Now we have public companies putting their money, treasury money, into Bitcoin. We have statesmen like Cynthia, who is the latest elect to the Congress.
Cynthia Loomis, the senator-elect of Wyoming.
Yes, Wyoming. She is talking about Bitcoin as a very solid store of value. So I think it's going to be really hard to go back to ban it totally. And also it is a very global network. As long as there are areas where Bitcoin is allowed, I think people will make their choice. Those areas where the government is banning it outright, I think ultimately they will see capital outflow. And that will change the mind of the government. For example, India banned Bitcoin at some point. And then they started to realize that it was not sustainable, and they open it again. So there are cases where we see the government tried it, but it didn't really work.
That leads me to my next question, Hong, which is that the new administration is putting together a new financial policy transition team with a lot of experts that have ties to the crypto community, notably Gary Gensler, for example, who has been an outspoken proponent of cryptocurrencies and has written about the subject. Why do you think the government wants to be closer with crypto experts?
I'm not in the position to comment on what the government or the next administration may want to do. But from an industry perspective, I think we definitely welcome more conversation with the government, with the regulator, because I think it's essential for us to have a embracing and forward-looking regulatory framework for Bitcoin and any other new technological innovation to thrive. It is very new. It's something that we've never seen before in human society. So there got to be a lot of ambiguities and gray areas that we have to explore through. And we need government support and creating the right constructive environment for us to do that proactively. And at the same time, keep the bad actors on the side.
Hong, let's talk about OKCoin now, and maybe a little bit about your background, how you transitioned. You were an MBA grad from the Chicago Booth School. You went to Goldman Sachs to work in their corporate finance division for a while before you transitioned to the crypto community. I'm just wondering why you came from a pretty conservative traditional finance background. You decided to work in crypto now. What made you do that switch?
Well, I think the underlying theme is consistent. When I went to Chicago Business School to study math, I went there because I believe in the free market. And I think the free market is the empowering force for either economy or individuals who, like you and me, who live in it. And when I go to Goldman investment banking, financial is the center of the free markets. I want to be part of it. After spending 8 years in investment banking, I started to do growth equity investment. And that's when I came across OKCoin, which was back then the largest RMB to crypto exchange platform in China. So I actually ended up investing in them. I led their Series B investment, and I've been sitting on the board ever since. When upon making that investment decision, I realized that Bitcoin actually represents that free market spirit. It is free market in money. It is the ultimate free market that we can see. So I have a lot of conviction in what it can become and what kind of value it can bring to us long term. In 2009, I decided to switch from the investor role and put on the operational hat and joined OKCoin on the operational side. It's just too fun a ride.
Yeah, a little bit about OKCoin. How does it work?
OKCoin is we are a regulated fiat to crypto exchange. We're headquartered in San Francisco. We register with in US with different states with FinCEN. We offer fiat to crypto trading in US dollar pair, in euro pair, in Singapore yuan pair. So if you want to buy Bitcoin, for example, with your US dollar or euro, come to us. This is the place. we have been here for 3 years. We are working very hard over the last 12 years to build our platform as well, and product. A lot of good product feature have coming out. Feel free to check us out.
Thank you very much, Hong. It was a pleasure speaking with you today.
Same here. Thank you for having me.
And thank you for watching Kitco News. I'm David Lin.